But big bull Rakesh Jhunjhunwala places his bets on the pharma sector, citing a weak rupee as a beneficiary for the space. Speaking exclusively with Nikunj, he also spelled out his outlook on the markets.
I won't be surprised if Lupin has very good earnings growth from here, and also the fact that the the rupee depreciation is very advantageous to them, right? And I think, and this is not going to be a 6 month, 1 year phenomenon. I think Indian pharma is going to do well for the next decade.
Despite whatever is happening in US FDA, we could have a new drug pricing, in the local market.
But drug pricing policy is Lupin has stated that it affects them to the extent of 30-40 crores, which had a profitability of 2,000 crores before tax. I think last year it was maybe 2,000 or 1,800 crores before tax. Is nothing big. And US FDA is, if you maintain your plants well, there is no FDA. If you don't maintain your plants.
So markets have been paying a certain degree of premium for predictability and quality stocks and companies which have a strong return on equity. Do you think that trend will continue? Companies which are growing, they will demand a premium?
Well, you got to have a really good quality company, good corporate governance. See, any company who has 15 to 20% growth, has a return on capital which is around 25%, has good corporate governance, it is commanding premium and doesn't have a very bad debt profile. Well, if you can fulfill those conditions, your stock will also get a premium.
Government of India is seriously trying to push the gold demand down. Do you think gold is not the only problem? There are other problems which they need to worry about?
Well, there are a lot of problems. Gold is one of them. But I think you can't curb gold consumption by saying that, oh God, don't consume. We got to have alternative methods of investment. Second is, you already made it expensive to buy gold, right? And what was happened in April and May was a big, I would say, something is not going to be repeated, right? And also, are we taking the longer term steps needed to boost exports, to ease manufacturing, to bring down manufacturing costs, to facilitate services, right? So, just by acting on gold, nothing should happen.
Reserve Bank of India also has instructed companies like Titan to not get into gold borrowing. Are you worried about that move? Will that change the business model? The return on equity for Titan will now collapse?
I think the return on equity may not collapse. The return on capital employed may go down. Well, so be it. But the return on equity is not going to go down. Their costs are not, as I have analyzed things, they will not, whatever higher interest costs they will pay, they will be able to recover it by passing it on. Whether they pass it on, I don't know. Pass it on some part to the customer and by hedging the rupee. So what I have understood is that the return on capital employed will go down because the capital employed will go up, but the return on equity will not go down because the profitability will not go down.
But does such a sharp price fluctuation in one of your core holdings bother you? Do you look at your core holdings on a daily basis, on a monthly basis, or you're not bothered as long as the company is growing?
See, I wish it doesn't take place, but as long as the company is growing, and we must realize one thing, that Titan has had an incredible rise. The price was 1400 say 3 years back, and it went to 6000. No, it went to 6,000, and today also it's 5,000. So if I look at it over a 3 year angle, what is there to be unhappy? Even at this level, the stock is 3.5 times what it was 3 years ago. And there are instances where by external factors, fluctuation do take place. If the fluctuation were to take place because of the performance of the company, then it would be a cause for worry. If it has been taking place due to external conditions over which the company has no control, I am not worried. I am not worried about Titan, although I did sell some Titan in between.
But that really could be a portfolio adjustment.
And it became too a large part of my portfolio. And second, also I was anticipating that some kind of this trouble could take place. But there was a lot of thought. So I sold some part of my holding. I first purchased at 35, and I've sold first time when the price was 5,700. I think I have a right here.
Every time when we inform to our viewers that I would be interacting with Mr. Jhunjhunwala, we start getting emails, and all the emails have just one query. Please ask Mr. Jhunjhunwala which is the next Titan.
Well, I am searching for it. When I find it, I surely call you. Because when we buy, we never know it will be the next Titan. Only time will tell us whether it will or it will not.
But if I look at your recent activity, you've been shopping a lot, and what you've been shopping is pretty much in the old economy side. A cement company, you made investments in a airline company, you've made other old economy investments. So are you now preparing your portfolio for the new growth cycle?
Well, I don't think that way I look at companies. And I believe that manufacturing activity, manufacturing assets are going to have a lot of importance, are going to go up in value because of the lack of new projects and because of the depreciation of the rupee. And also I find that when I meet some of the entrepreneurs who are written off by the market, I think there is a sea change, both in terms of the people they are employing, the kind of freedom they are giving the people, the quality of the people, and also their attitude towards business. I think there is a, where market is written off promoters, right, and there is a change in attitude of promoters. I think there is a big mismatch there, and it will not be corrected easily, because market will not believe about it easily. But once it does, it will be the opportunity and returns can be mind-blowing.
So one stock you bought is Nagarjuna, which has been a constant holding. You bought it.
Well, let me not discuss all my stocks.
Fair point. Fair point. We won't get into what you're doing, but let's look at key themes now. You have some investments in the banking sector, especially the old private banking space. The private banking space could get more competitive because of new licenses. How do you see things shaping there now?
There's space for everybody. See, banking has got one very, very good advantage, that we are amongst the most unbanked countries in the world. We have more mobile phones than bank accounts. Second, the level of any kind of consumer credit, whether credit cards, housing, is extremely low in India. Right? So I think there is space for 40 more banks. Any bank can have a growth of 15% in any bank. I think is very easy, because banking itself is growing by 15 to 20%. So I am not bothered if new banks come.
What is your stand on this entire debate of public banking versus PSU banks? One side there is value, other side there is growth, one side there is opportunity, other side there is quality.
Well, I think at these levels, public sector banks also could offer opportunity, but you'll have to do a lot of bank-wise analysis. I can't say that I buy this public sector bank and I buy all of them. I think select some of them may be offering great opportunity.
Let's look at IT, a clear beneficiary of decline in rupee. Last time when I interacted with you, you pretty much indicated to me and our viewers that the IT sector now is a matured business. But is it time to revisit IT stocks now because of rupee?
Well, I still say it's a mature business, and they will offer, according to me, 12 to 18% returns, which are good returns, very good returns for institutional investors.
That does not excite you?
Depending on well, I won't say it doesn't excite me, but I mean, I'm surely looking for greater than 12% growth.
So what do you like within the technology space? You've got some investments. Without getting into names, it's public information. I'm just trying to understand the pockets.
In the technology space, and it's nothing that I like and I don't like.
I would also like to draw your attention to earnings, because ultimately what drives the market is liquidity and earnings. Now there's a big question mark on liquidity, and earnings are likely to remain noisy in the near term given how rupee has moved and bond yields have moved. So what will really drive markets then?
What not come again?
No, it's about earnings and liquidity. Now earnings could remain noisy because how rupee has moved, what has happened to bond yields, what's happening to commodities. We can argue what will happen to liquidity. So what will drive markets if liquidity is going to be deficient and earnings will be noisy?
See, in spite of all the problems, there is a selected group of companies, both among the fancied and the non-fancied, whose earnings and earnings growth will be good. It's not that uniformly companies will do well or uniformly companies will not do well. Second thing is that today I am buying an asset not for what's earning today. I am buying for an asset for what is earning could be 5 years later. So I am not bothered about what happens this quarter.